Hi, trades. This is Brad Gilbert with the sort of week ahead analysis starting on Monday, the 6th of September. All right. Now, having a look at where the non-farm payrolls finished. Very disappointing underlying non-farm payroll number, 235. The forecast was around 728. Right. So that's sort of a bit of dollar weakness, but strength in the unemployment rate and average earnings, right, or improved rates, I should say, even though the unemployment rate was right on expectations at 5.2. It is an improvement on the previous month. The really weak numbers gave the dollar a negative injection, which we saw on the dollar index here, but then it stalled and it's now trading sideways. If anything, it's a bit of a weird one because we saw, if anything, the treasury yields go up a little bit and a pretty neutral reaction here on the equity markets. Now, this is a bit twofold. We've got the Labor Day holiday in North America this Monday. And so with trading, I think there would have been a bit of liquidity out of the market. And that's really sort of made it a bit of a confusing one because those numbers also make it a little bit tricky to work out what the Fed is going to do. If anything, they're probably going to stay on hold for the meantime, which I would have thought yields would have gone down and equities would have gone up, right? But it's not the case. So it's not as clear cut as you think. Now, right here at the moment, the NASDAQ futures, I'm just having a look at the US equity futures to start the week. Now the markets are re-engaging. There's a few equity indices down here, okay, which suggest a bit of a risk-off situation, which is what we're seeing in the currencies. The dollar pairs are going up. The dollar block is going down. I'm more interested in really the NASDAQ futures than anything else. So it's a bit of a strange one. That's what we're seeing at the moment. If anything, it looks like the dollar's been overdone, even on those weak numbers. So we're either missing a piece of the puzzle here, or it's not clearly evident just yet what's going on. Now, if I just give you a bit of a look over here at the bit of what's going around, dollar near 1 month low on bets for later Fed tapering. Well, that's sort of obvious after that number. If anything, I think the Fed's bought themselves at least another month. Everything they talk about in their narrative is all about maximum employment. Now, one thing is, I think they're talking about the rate, 5.2%. It's got to be getting, well, it's not exactly close to the maximum employment we saw at the start of the pandemic in 2020. It's around 3.5%, but it's improving, right? So anyway, it's a slow step forward. The underlying non-farm payroll number was the big number that screwed the rest of the market. Now, rest of the news here, it's a bit of wish-wash around what's going on globally, nothing very clear. Looking at the major currency pairs, just on the hourly charts, that dollar weakness has these currency pairs back in the range or moving higher. I think it's a bit of a clean out, massive clean out to the downside. Now, don't forget, leading into the non-farm payrolls, we had 4 days of a negative dollar. It's like, and a lot of the movement on the dollar has been blamed, or the weakness in the employment numbers, on the Delta variant of the COVID virus, right? So that was 4 days in, we saw the weakness. Maybe that's why we didn't see a big dollar clean out to the downside, because a lot of the hard work had been done. We've got the dollar index down here. It needs to get back above 92.60 to get back to the top side. But at the moment, dollar CAD lower, oil's come back, will fall on $1 at the start of Monday. So maybe that gives the dollar CAD a bit of upward bias. The other pairs, well, we're going to be really reliant on local data, right? Because the US dollar, with the release of this data, the non-farm payrolls Friday, we've got till next Tuesday week before we get the US CPI numbers. So we're really, if anything, just going to trade with a dollar bearish tone, or if anything, sideways for the dollar. So we need another currency pair to stump up, give us direction to hit the major pairs, or maybe we hit the crosses. So that's where we are. I think with the major pairs now coming up to this week, right? Have a look around on the economic data front. Now, don't forget Monday, holiday in the US and Canada. So the markets are going to be very quiet across the North American session. Tuesday, we've got the RBA, okay, central bank meeting. Nothing expected there. I don't expect anything out of that meeting there. There's a few bits of data coming out. Wednesday, we have the Bank of Canada. Now, this is more important because the Bank of Canada has already given us, brought forward their forward guidance on potential interest rate hikes. So this is an active central bank which could create some activity. So make sure you tune in to Wednesday's Bank of Canada rate decision. You've got Thursday, we've got the ECB, right? Oh, I've gone past it. Here we are here, ECB. Now that's going to be important. There's a lot more European or ECB members talking about how inflation's starting to really pick up. So we may start to see the ECB chime in with some input on what their plans are. And to finish the week, I mean, there's a bunch of UK data there, but I love every second month where the Canadian employment numbers come out by themselves, not at the same time as the non-farm payrolls, because that's a pretty aggressive release that can give us serious momentum. So as we get into Thursday's trading, my focus will be on the CAD and CAD crosses. But in the lead up to that, we've got 3 central banks meeting, the RBA, the Bank of Canada, the ECB, and there's a few data releases in amongst that for us to sort of pick and probe at. But you know what? You can't deny the disappointment of not having a really clear US dollar. Okay, that was our lifeline to direction for the major currency pairs and momentum. At this point, it's not there. So we're going to have to really focus in on where the potential opportunities are. The dollar's come a long way in a very short period of time. You'd think it'd head back towards 92.60, but we need a reason to get it back there. All right. At this point, I don't see it. So I'll be watching very closely what happens as we go through Monday, Tuesday this week, what happens with the treasury yields, and conversely the US equity markets, right? Whatever happens to these two should determine what happens to the US dollar, and that's the direction for the major currency pairs, and we'll see how the other central banks go. That's the way I think you need to attack it. In the meantime, if you're disappointed with those non-farms because we didn't get the result, well, experience that, flush it out, and give yourself a couple of days to relax, then come back. We'll start to reanalyze the markets, looking for the good opportunities this week. All right, guys, have a good one. All the best. Cheerio.